What is happening, crypto fam? Get ready, because the news cycle is absolutely exploding, and you are not going to want to miss a single second of what's dropping today on Bitcoin Bulletin. We've got seismic shifts, strategic moves, and some serious financial fireworks that could reshape the entire landscape. Are you first up? We're diving into a move by El Salvador that's making waves globally, a strategic custody model that's turning heads and raising eyebrows. What does this mean for the future of national Bitcoin adoption? Next, we're shifting gears to the investor frontlines where a major play is unfolding. Get this, investors are staking for an unbelievable 90% APY, completely defying the bearish trends that have plagued so many other altcoins. We're talking about a platform that's not just surviving but thriving. What's the secret sauce behind this massive yield, and why is it catching fire? Then, we're looking at the big money players. Institutional Bitcoin buying is reaching a fever pitch, and the data is undeniable. We're talking about a catalyst that could be the ultimate driver for long-term price stability and finally push Bitcoin into the mainstream adoption stratosphere. What does this surge in institutional demand really signal for the months ahead? And finally, we've got a fascinating reversal happening in the whale tanks. Are the big players swapping their king coin for another major player? We'll break down the massive BTC for ETH moves that are happening right now as institutional demand stacks up elsewhere. You absolutely need to know what this means for your portfolio. Don't go anywhere. Make sure you're subscribed, hit that notification bell, and smash that like button so you never miss an update. Global strategy shift: El Salvador's bold Bitcoin custody move. El Salvador's pioneering adoption of Bitcoin has always been a bold statement, but their latest move in strategic custody is poised to make an even more significant impact. The nation has reportedly been exploring and implementing a sophisticated custody model, moving beyond simple holding to a more actively managed approach. This isn't just about securing assets. It's about building a robust financial infrastructure that leverages Bitcoin's potential while mitigating risks in an evolving digital asset landscape. The specifics of this new custody model are still emerging, but early indications suggest a multifaceted strategy. It likely involves diversifying custodians, employing advanced security protocols, and potentially even exploring decentralized custody solutions to enhance resilience and decentralization. The goal appears to be creating a framework that is not only secure but also adaptable to future technological advancements and regulatory changes. This proactive stance is crucial for any nation deeply integrating a volatile asset like Bitcoin into its financial system. Why does this matter so much? El Salvador has been a global experiment, the first country to adopt Bitcoin as legal tender. Their successes and challenges are closely watched by other nations considering similar paths. By refining its custody strategy, El Salvador is not just protecting its own reserves, it's creating a blueprint. A successful, secure, and efficient custody model could significantly de-risk Bitcoin adoption for other governments, paving the way for broader international acceptance and integration. It addresses a key concern for many: how to safely manage and deploy significant Bitcoin holdings at a national level. This strategic shift also signals a maturing approach to Bitcoin management. Instead of simply holding assets in a single location, El Salvador seems to be embracing best practices seen in traditional finance and the digital asset industry. This includes principles of diversification, robust risk management, and operational resilience. Such a move could bolster confidence among international financial institutions and investors who are still evaluating the long-term viability and security of national Bitcoin treasuries. The implications extend to the broader Bitcoin ecosystem. Enhanced security and more sophisticated management by a sovereign nation could reduce market volatility associated with its holdings and demonstrate a commitment to responsible stewardship. It's a move that speaks to long-term vision, positioning El Salvador not just as an adopter, but as a sophisticated player in the global digital asset arena. Hold on tight, because the next story reveals an unbelievable investment opportunity that's defying the market downturn. Get ready to see how one platform is delivering massive yields while others are struggling. Massive yields defy market. investors flock to 90% APY staking. In a market often characterized by volatility and uncertainty, a remarkable opportunity has emerged, drawing significant investor attention and staking activity. One particular platform is not only weathering the current bearish altcoin trends, but is actively rewarding its participants with an astonishing 90% annual percentage yield, APY, on staked assets. This exceptional return is attracting a substantial influx of capital, with the platform's presale alone raising over $6.3 million, showcasing a strong market appetite for innovative and high-yield opportunities. The platform in question, BlockchainFX, has implemented a hybrid model designed for both passive income generation and real-world utility. At the core of its appeal is the high APY staking reward, distributed in both its native BFX token and stablecoin USDT. This dual reward system provides investors with immediate value and long-term growth potential. Furthermore, the platform demonstrates a commitment to its community by redistributing 70% of its trading fees back to stakers and for token buybacks, creating a sustainable economic loop that benefits participants directly. This transparent fee-sharing mechanism, coupled with audits from reputable firms like CertiK, CoinSalt, and SolidProof, instills a crucial layer of trust and security in an often opaque market. This strategy stands in stark contrast to the performance of many established altcoins. While major players like Litecoin and Solana are navigating price pressures and market corrections, BlockchainFX is carving out a unique niche. For instance, Litecoin has seen limited buying interest, and other altcoins are underperforming Bitcoin, with the altcoin season index indicating a lack of broad altcoin dominance. Ethereum, while showing strength due to regulatory clarity, operates in a different category. BlockchainFX's model, however, directly addresses the demand for consistent returns and tangible utility, exemplified by its upcoming BFX Visa card, which will enable users to spend their crypto assets in everyday transactions. The project's presale structure further highlights its potential. Priced at 0.021 per token with a projected listing price of 5 cents, it offers an immediate 138% upside at launch. Early participants can also leverage bonus codes, amplifying their initial investment. The rapid growth, evidenced by over 6,900 participants, and a beta platform already supporting 10,000 daily users, suggests strong underlying demand and functional capability. Analysts are positioning BlockchainFX as a top presale for 2025, especially considering the potential for bullish momentum in Q4 driven by anticipated shifts in Federal Reserve policy. In essence, BlockchainFX is demonstrating a powerful alternative to the prevailing altcoin sentiment. By combining high-yield staking, a robust fee redistribution model, strong security audits, and real-world utility through its BFX Visa card, it is attracting investors seeking tangible returns and project stability. This approach is particularly compelling in a market where many altcoins are struggling to maintain momentum, making BlockchainFX a noteworthy contender for those looking to capitalize on emerging opportunities. Stay with us because the next story reveals a massive influx of big money into Bitcoin, and it's changing everything. Get ready to see how institutional demand is shaping the future of the digital gold. Institutional Bitcoin surge, a game changer for price stability and adoption. The narrative surrounding Bitcoin is increasingly being written by institutional players, with a significant surge in corporate and retail demand now poised to become a major catalyst for long-term price stability and widespread mainstream adoption. Recent data reveals an unprecedented appetite for Bitcoin from institutional investors, far outpacing the asset's newly mined supply and signaling a fundamental shift in its market dynamics. Analysis from Bitwise highlights a dramatic increase in institutional Bitcoin accumulation. In July and August alone, corporate treasuries added a staggering 140,600 BTC. This figure is remarkable as it nearly matches the total amount of new Bitcoin mined within a full year, illustrating a profound imbalance between supply and demand. Looking at the broader 2025 landscape, institutional demand has absorbed over 690,000 BTC, while the total new supply during the same period was just over 109,000 BTC. This translates to an institutional demand-to-supply ratio exceeding 6.3 to 1, a powerful indicator of sustained buying pressure from sophisticated market participants. This institutional wave is not limited to corporate treasuries. Retail investors are also participating heavily, with Bitcoin wallet cohorts exhibiting the strongest buying activity observed since April. This broad-based accumulation is occurring even as Bitcoin's price hovers around the $108,716 mark. Despite the lack of significant short-term price appreciation, the underlying accumulation trend is robust. Technical analysis points to a tight trading range, with key resistance levels around $109,500 and $109,500, and a recent surge in trading volume at 13.00 UTC suggests active institutional engagement at these price points. Analysts interpret this sustained demand as a precursor to significant price appreciation and enhanced stability. The sheer volume of institutional buying acts as a strong floor, absorbing sell-side pressure and reducing the impact of short-term market fluctuations. This consistent absorption of supply is a key factor in achieving long-term price stability, a critical element for Bitcoin's maturation into a recognized store of value and a reliable medium of exchange. Furthermore, this institutional embrace is a powerful validation of Bitcoin's potential, driving mainstream adoption. As more corporations, investment funds, and traditional financial institutions integrate Bitcoin into their strategies, it legitimizes the asset class and encourages wider acceptance. This trend is crucial for Bitcoin to transition from a speculative asset to a fundamental component of the global financial system. The increasing demand from entities that prioritize security, compliance, and long-term value propositions signals a growing confidence in Bitcoin's resilience and future prospects. Despite the positive accumulation trends, market sentiment remains cautiously optimistic, reflected in a fear and greed index reading of 46, indicating a degree of fear in the market. Analysts caution that short-term volatility risks persist, influenced by macroeconomic uncertainties. However, the overwhelming institutional demand suggests that any potential dips may be viewed as buying opportunities by these large players, reinforcing the long-term bullish outlook. The current environment, characterized by strong accumulation amidst cautious sentiment, sets the stage for Bitcoin to potentially break out as institutional adoption continues to accelerate. Get ready for a surprising twist. Even as institutions buy Bitcoin, whales are making a dramatic move elsewhere. We're about to reveal which major coin is attracting massive whale attention right now. Whale alert: major investors swap Bitcoin for Ethereum amid institutional influx. In a fascinating market dynamic, significant capital reallocation is occurring as a major Bitcoin whale has divisibly dumped a substantial amount of BTC to accumulate a large position in Ethereum. This move, occurring even as institutional demand for Bitcoin continues to stack up, signals a complex interplay of investor strategies and market sentiment shifts. The whale in question offloaded 4,000 BTC, valued at approximately $435 million, to acquire 96,859 ETH, worth around $433 million, according to on-chain analytics firm LookInChain. This transaction is part of a broader trend where this particular whale, known for managing wallets with over $11 billion in Bitcoin, has been reactivating dormant accounts to facilitate capital movement towards Ethereum. Over the preceding 2 weeks, the whale amassed an impressive 837,429 ETH, accumulating over $3.8 billion in the process. This concentrated buying activity by a significant holder has demonstrably boosted Ethereum's market performance, with ETH outperforming Bitcoin by nearly 24% in August. At press time, Ethereum was trading at $4,424. Traders observe that such large-scale accumulation by influential market participants can significantly influence broader market sentiment. Concentrated buying can foster optimism and potentially attract other large investors, creating a positive feedback loop. However, Ethereum's price remains susceptible to short-term volatility. Analysts point to potential liquidity clusters that could trigger pullbacks, a common characteristic of highly liquid markets. Ethereum's derivatives market presents a mixed but generally consolidating picture. While total derivatives volume saw a 14% decrease to $61 billion, open interest increased by 2.9% to $60 billion. The OI-weighted metric saw a slight decline, suggesting a marginal decrease in the strength of overall market positioning. This indicates that traders are holding existing positions rather than initiating new aggressive ones, pointing towards a period of market consolidation. Despite these market dynamics, Ethereum's Fear and Greed Index stands at 46, reflecting cautious sentiment within the market. Over the past 30 days, Ethereum has experienced 47% green days, suggesting consistent, albeit uneven, demand. This cautious optimism is partly attributed to emerging regulatory clarity in the United States, which has created a more favorable environment for stablecoin protocols and the broader adoption of crypto treasury management. Meanwhile, Bitcoin continues to exhibit a pattern of strong accumulation despite relatively flat price action. The significant institutional demand, as previously noted, is absorbing supply at an unprecedented rate. However, this robust buying pressure has not yet translated into substantial price rallies, with Bitcoin trading near $108,716. Technical analysis indicates a narrow trading range, with resistance around $109,500. While a surge in trading volume suggests institutional involvement, analysts caution about the risk of retesting the $100,000 level amid ongoing macroeconomic uncertainty. In essence, the market is witnessing a divergence in immediate investor focus. While institutions continue to accumulate Bitcoin for long-term stability and adoption, a prominent whale is actively reallocating capital to Ethereum, potentially capitalizing on its recent outperformance and positive market sentiment. This strategic shift highlights the dynamic nature of the cryptocurrency market, where different asset classes and investor behaviors can coexist and influence market trends simultaneously. And that's a wrap on today's explosive updates, but don't go anywhere just yet. We've got a lightning round recap coming your way right after this. And that's a wrap on another action-packed episode of Bitcoin Bulletin. We saw El Salvador making strategic custody moves, investors chasing incredible 90% APY yields, institutions pouring billions into Bitcoin, and whales swapping BTC for ETH. Don't miss out on any of these critical updates. Make sure you're subscribed, hit that notification bell, like this video, and follow us on all social platforms to stay ahead of the curve. We'll see you on the next one.